we've gotten bigger, our strategy has gotten more sophisticated. So whereas the individual syndication route works well, we want something that works better for investors and for us.
Well, at WCG Investments, meaning we want to impact as many families as possible positively, always by providing safe and clean, affordable housing throughout the Southeast.
Hello guys, welcome. This is another edition of our recorded webinars. I'm Vinny Carias and I'm here with my partners, Tim Woodbridge and Matthias Grunwald. Say hi guys.
What's up everyone?
So thank you for joining us. We wanted to give you a behind the scenes look at what WCG Investments is working on as we explore the possibility of moving on from individual syndications to a fund model. So while we're still in the planning stage, we thought it would be important to keep you, our investors, in the loop and share the vision we're developing, how it might benefit you and how it aligns with our long-term goals. So today we'll talk through why we're considering this transition, what the fund could look like, and how it could impact our strategy and the communities that we invest in. So with that said, let's get to the first question. Tim, so what led WCG Investments to consider transitioning from an individual syndications model to a fund model?
So, yeah, man, good question. Just as we've gone and gotten bigger, our strategy has gotten more sophisticated. So whereas the individual syndication route works well, we want something that works better for investors and for us. And so how the fund model will work, it'll make every investment that investors put in, and every little bit that people put into the fund, it'll make it a lot more safe because it's diversified among many assets. So, whereas a single syndication is you have ownership in one deal, a fund, it's like you have a little bit of ownership in all of these deals. And so if one deal, God forbid, goes a little sideways, which sometimes deals do, then, a lot of the other deals will prop them up. Obviously, we're not counting on that, but everything we do is how do we protect investor capital and how do we make sure that they're number one? Because we know if we're keeping our investors number one, then we're going to be growing tremendously with them. So that's our big goal. And then on top of that, having a lot of capital in the bank for deals gives us a lot stronger buying power. And so we'll be able to get better deals. If I say, oh, we've got, you want, whatever, $6 million for this deal, we've got $5 million in the bank. We don't need any bank to do anything. We can, act quick on this. Then all of a sudden, that, where they say cash is king, all of a sudden that cash goes a long way and we can get better deals, which of course, then you refi and all that good stuff. But it's really just getting better deals for everyone, for investors, for us. And it allows us to scale a lot more as well. And I know Matthias can speak on this too. The more we scale, the easier things are getting because of all of the work that is being done behind the scenes to really support that. So, we're able to hire more people and have better systems, and it's just, it just, things work so much smoother.
Yeah, that was really good stuff. A lot of information for our investors. So Tim, up to this point, we have a lot of experience with syndications, right? We use that model for a lot of our mobile home parks. How has that experience shaped the vision for this fund?
So it has, first of all, there's nothing wrong with syndications. We've grown like a ton. with raising capital for the individual syndications. So in our experience, we've just realized that while it works, it's a lot of short-term life cycles when we're trying to raise capital for a deal. So it's find a deal, rush around to raise capital, close a deal. And it's fine, but we're really looking for a smoother way of doing things. So more effective, less roller coaster ups and downs, and more like, okay, we're always raising, we have this open. Like all of our deals are very similar, so it works to raise for them. We, anytime I can talk about what our buy box is and what we look for, and we don't stray from that. So this will be a lot more stable in terms of having available capital to do these big moves, which is going to make such a big difference for investors.
Yeah, that's good stuff. So, Matthias, we have been growing a lot lately, and that's pretty much what triggered the conversation of a fund. So for you, when did you realize the fund structure was the right next step for us?
Good question, Vinny. Tim and I have been talking, numerous times about when is the next step for us and when do we have to initiate the fund model. And there's a saying out there that goes, if you want to know the road ahead, ask the people that are coming back. And we surround ourselves with people that are much bigger players than we are. So we heard a lot of feedback from people when they are switched to a fund model, on what level. And it always came back to around like 1,000 units under management, and you're getting bigger from a scaling perspective, that it makes sense to switch to a fund model as the deals are getting bigger, the capital raises are getting bigger. And it's always a race to the end after the due diligence is done, and then to the closing. There's always a race to get a capital raise in a very short time frame, as Tim mentioned earlier too. And it just makes more sense on the fund model. We continuously raise all the time, basically advertising to our investors the asset class and the operators, meaning us, they're investing in, but it's diversified throughout different deals and different projects, if you will, which makes it a much safer investment. And for us, we have that buying power to really take down any deal at any time. And even like Tim mentioned earlier, it makes us really powerful to take a deal down that might be off market and buy it all cash, and then put bank financing on it after closing, because you can move really quickly because the money is in the account, so to speak. So that makes it much more powerful for us to be more dynamic in the market, and more of a more sophisticated buyer, and move basically to the next level in that game, so to speak. So I feel that will be a major benefit for our investors, because we can take down really deals that have tremendous returns, because we can compete on another level that we couldn't compete at a syndication level. And syndications are great. They're a tool in the tool belt, and having a fund in parallel, in a sense, doesn't mean we're never going to do syndications again, but we're going to mainly switch to a fund model. It's good to have that extra tool in the tool belt, to be more of a powerful buyer and a powerful operator.
Good stuff. Tim, you alluded to this a little earlier, but how will a fund allow us to act faster and more strategically when the opportunities come up?
Yeah, we have our buy box. We're sticking with the Southeast. We love operating in the Southeast. We have a specific kind of deal we want to do. We're really clustering around specific cities in the Southeast. So we get a lot of good opportunity to scale in those areas. And it just it's going to allow us to move quickly into deals that honestly, sometimes you just got to move quickly, and the people who are able to do that are the ones who get better deals. And it all always goes back to our investors. And so like the better deals, we're looking at those for ourselves. But it's like we always put the investor first. So we know, okay, like our Albany deal, right? So, investors it's a projected 2.83x equity multiple in 5 years. And that's a really great deal. And it's going to be a really great deal for us too. We're going to make a good deal of money, but we keep investors first when we're getting any kind of deal. But yeah, this fund model is really going to allow us to continue that and do even better, be able to serve investors even better.
That is the goal. Matthias, in what ways does this fund help scale impact beyond individual projects?
Yeah, we have definitely like an emotional ROI we look at as well at WCG Investments, meaning we want to impact as many families as possible, positively, obviously, by providing safe and clean, affordable housing for the Southeast. So with that fund model, we have more buying power. We can take more communities down. We can improve more communities, and just being a better buyer and a better operator at the same time. Because money can fix a lot of things, especially communities. It's really that simple. I think that will bring us into a level where we can have tremendous impact on thousands and thousands of families across the country, across the Southeast, where we're mainly buying. So I think that's super powerful, and it personally excites me to sit here and talk with you guys about it too. That we get to a fund model where we can really impact neglected mobile home parks out there and come in and clean them up, make them a safer place to live, and have families living in a safe and clean environment. So that's a huge emotional ROI, not only to us, but I'm sure also to our investors.
Yeah. Matthias, sticking with you for a little bit. So many investors, they value transparency. How will WCG Investments maintain or even enhance that under the new fund model?
Yeah, nothing will change on the transparency side. Of course, with a fund, you might have 2 or 3 deals in the same fund, but we're still going to report back to our investors on the deal level, meaning nothing will change from what our investors are seeing right now. There will be a monthly report going out of how each deal performs. On top of that, we will look into having a fund level overview as well, how the fund performs with the specific assets included in the specific funds. You're starting with one fund right now, but of course, how it scales from there, you have multiple funds at some point. It starts with one, at some point you have 3, 4, 5, and of course, several deals, in each fund. So we're gonna report on the fund level, but also on the deal level itself as well. So you know which one's performing, which one is overperforming, underperforming, etc. And of course, and how that is summarized into a fund level performance will be reported to investors as well. Really, nothing will change there. We pride ourselves on our small company transparency, or we act like a big Fortune 500 player at the same time. So we want to retain that, although we go into a level of the big players, obviously, and certainly be kind of a big player already. I can say that without sounding too arrogant, if that makes sense. But we want to maintain that transparency because it also forces us to look at all the details every month. Because if you have to report the numbers out to investors, you have to look at the numbers in the first place, and you're catching things at the same time where something is maybe underperforming, and you maybe have to trigger changes and take action there. So I think that will be very powerful for the investors to see that on the deal level continuously, and then also on the fund level on top of it. So again, in the past, we also had investors after closing jumping on a call with us just to go through the financials. We always like to do that as well. If somebody has questions or concerns, whatever, we go through it and you just pop on the screen. Here are the baby pictures. Everybody can look at everything. There's nothing to hide on our end. So many don't do that, unfortunately. Many operators out there, they usually start to ghost the investors when things go sideways. And as you guys know from our previous webinars and content we're putting out, we show the good, bad, and ugly.
That is true. So we pride ourselves in being transparent, open and transparent via our webinars, our one-on-one interactions with investors, our newsletters. We try to be as transparent as possible. And you're right, we have shared some bad stuff that's going on, right? But we also share what we learned and how we fixed it, our approach to fixing things. Yes, as of right now, when we have deals and we're managing them, operating them, we have monthly reports, we have quarterly status, we have live webinars with investors. That's what we do now, right? To preserve that transparency. And that will not change. That will continue if we move to a fund model, right? And the approach, the data may be different, right? The more you get to see how diversified your portfolio is and how it's performing, but the communication and transparency, that will not change. Tim, an important question that may come up is, will investors still be able to see which properties their capital supports?
Absolutely. Yeah, that's an easy one. Everyone wants to know where their money is and what it's doing. So we pride ourselves on saying, like, okay, this is what it is. This is what your capital has contributed. And Matthias was talking a little bit about vision earlier, and so our big vision is to provide affordable housing for 10,000 people by 2028. Or that's our 3-year vision. So what that'll look like is okay, like you put in $100,000. Well, you're providing. I'd have to look back on the numbers. I want to say roughly for every $100,000, there's roughly 8 people provided with affordable housing. So it's like, obviously, it's not going to just be that high level. We're going to get pretty granular and be like, okay, you're invested in these specific deals, and this is what's going on with each of these deals. Here's how the fund is performing. But we also like to tie that in with what it actually means, because everything's numbers on a spreadsheet until you realize what it's actually doing. So we like to tie that together. It's like, you're not just getting great returns, you're providing a meaningful difference. So much so that you can, tell your friends, your family, and they can be proud of your investment. It's not just, okay, this is a cold calculated, yeah, good for you for making more zeros in your bank statement. It's like, yeah, I'm making more zeros, but also I'm helping to provide affordable housing to people who really need it. So yeah, we love the impact that we're able to create.
Absolutely. And it's really exciting, guys. The fact that we're having this conversation, it shows that we are growing, and it's not just us, right? We are creating impact across the board. So it's really cool for me and for the team. Any last words? How are you feeling, Matthias?
Good. I'm excited for the next step. 100%. I always envision when we go into this league that we're gonna have a fund at some point, because that's what the big players are doing, and now we're here. So looking forward to having the positive impact on the communities and give great returns to investors and just supercharge that one. I'm super excited.
Absolutely. Tim, last minute words.
Yeah, also super excited. It just like Matthias said, it's like, okay, you see people ahead of you and they're doing things a certain way, and you're like, man, one day, right? Like I hope I'm there. And I was at a local real estate meetup last night, and I remember going there when I had nothing, and now like I'm one of the bigger players there, and it's so surreal a little bit, and so like incredible to be like, oh, like I am here, and we are following in the footsteps of amazing people. We have friends that we've looked up to for a long time, and we're kind of stepping closer and closer to what they're doing. And yeah, it's super exciting. It's like, okay, I remember when that was just a cool thing. Like, man, I wish someday's today. And yeah, I'm very excited for where we are and where we are going.
So guys, if you're watching this, you can hear, you can see the excitement on the team. We're growing, and we want you to be a part of the journey. So if you have any questions, if you want to partner with us, reach out. You'll have our contact information below. So with that said, thank you for joining today and taking the time to hear about what we are exploring. While we're still in the planning phase, we hope this gives you a clear sense of our vision, the potential advantages, and how we are thinking about investor benefits and transparency. So we'll continue to keep you updated as the plans develop, and we welcome any questions or feedback you may have along the way. So thanks again for being a part of our journey, and we look forward to sharing more as things move forward. So with that, have a good day, and we'll see you guys on the next one. Bye.